Glenn, I love what you just said about the traps that we face, some of the variables that are outside of our control. But what I love is you also have an entire chapter in your book dedicated to really, I guess I can use the word outsmarting those variables, or playing bigger than those variables by investing. And you brought some really outside of the box creative thinking to the investing side of things. So many of us have been programmed on how to invest, and we think 401k and we think stock market, and we're just so traditional in our investing mindset. And what a lot of people are doing is really handing their money to those variables that are outside of their control. And you talk about the balance of some of those things, and really how to diversify your investing outside of some of the traditional sources to make your money start to really work for you. So talk to us about your chapter on investing.
For sure. It is the last assignment because, once you have your foundation and you have your cash flow straight and you have reserves in the bank that are liquid, reserves you can tap into in case of emergency, and then your debt is reduced, if you will, and then of course you're making more money. Investing is, once again, when I worked for this financial planning firm, I realized, oh my gosh, we're all just on this treadmill all the time. Make more money, put our money here, take money and put it into the stock market. Up, the stock market is down, and now we just lost more money. Now we got to go make more money, and then, oh, let's go buy this flat screen TV, and there's all this money is just coming into our lives, and then it's gone, and that proof is the proof is in the pudding. I mean, you have most retirees that are 65, 70, and they can't retire. They got to go back to work, and that's why Walmart is the #2 employer of all retirees. And so, anyway, so that's why I wanted to have a killer assignment, if you will, a chapter on investing, because at the end of the day, if we're not putting our money into something, we're losing our money. And so, what the question is, what do you put it into? So I go through. First is invest in yourself. Because putting money back into education, and this is all planned and automated throughout the plan. How much money do you allocate investing in yourself? Maybe it's $40 a month, buying audiobooks or seminars and so forth. Investing in yourself, because we are the #1 asset. Think about this: if you make $80,000 a year, do you have an asset, right? Or $120,000 or $200,000, whatever the number is, $50,000. I guarantee you that most people don't have an asset like a stock or whatever that yields what they earn in a year, right? Think about it like that. So we are our best asset. The second thing I go through is retirement plans. They are not what you think. Most retirement plans are brutally slow, and what they do is they say, hey, defer tax. Let's just take tax. Let's defer it all, and you can have tax reductions. Well, guess what? Do you think that taxes are going to be higher tomorrow or today? Tomorrow. If we took a poll, everybody say tax are going to be higher tomorrow. And then, so what most of us do in retirement plans is defer the tax, okay? Defer the pain into a tax environment that is going to be higher, and when we're not working. Okay, which is crazy. To me, I want to get taxed today when I know the taxes, so I can plan better, and then so tomorrow when I'm not working, I can have tax-free retirement. So I go into different types of tax-free retirement vehicles, okay, and then also other traditional retirement assets such as a 401k and a Roth IRA and so forth, and then we go into index funds, and the basis on that is, we don't need financial planners and money managers. We can do it ourselves, and we can then bypass a lot of the fees they charge, because the fees that they charge are tens and tens and tens of thousands of dollars over a lifetime. So this shows you how you can invest in the stocks yourself and keep up and beat the market even. And then it goes into gold, investing in precious metals, because the reality is we might not have a money system like we do today, a monetary system, because of all of the international forces, the global forces that are happening right now. I don't want to get into it, but we talk about precious metals in the books, and then real estate even, and venture capital. So we really go into all of it. And so the bottom line is, if you're thinking, and you're watching this video and you're thinking, yikes, I can't do that. I am not that type of person. This is too complicated. Because look, if someone told me about all this stuff immediately, I would have said, whoa, I can't do that. That's not me, right? here's the thing. We all can invest. It's really actually pretty simple. We just need to know how and what to do, and we need to know some of the details. So this book goes through and literally sets up a dummy-proof investing plan with all of this stuff in it.
I love it. I gotta say, man, I just said something that just flipped the light switch in me, that we defer the pain. And boy, is that a home run principle, man. If we're willing to take on certain pain right now in our early phase, when we're on our A game, when we're young, when we're building, when we can really absorb it now and realize that the pain's going to have to be paid at some point.
Yeah.
Let's take on the pain now, pay that price now. That's really a key part of really a life principle on every level,
yeah.
Whether it's relationships or money or building a successful business or whatever, working out and exercising and being healthy. Number one, it's going to be much less pain if we deal with it now than it will be later on. And number two, we set ourselves up then for the reward on the other side of the pain. So we don't end up with pain, we end up with reward.
Exactly. Absolutely.